Hello everybody, this is Toni Turner and welcome to the market now as of about noon Eastern on Friday, September 22nd. Before we start, please join me at the Money Show Dallas on October 4th through 6th. I'll speak on Friday, October 6th on Active Investing, 3 Steps to Consistent Profits. Just go to moneyshow.com and click on the Money Show Dallas banner. And now, on to the market. U.S. stocks are little changed today so far as fresh concerns over tensions between North Korea and the United States are weighing on the mood of investors. The latest spike in tensions prompted demand for gold, which is trying to rebound from a 4-week low. Oil prices are steady so far today as investors are waiting to see whether major producers meeting in Vienna will back an extension to output cuts beyond March next year. And with all that going on, let's look at 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, as you know, this is the ETF that tracks our S&P 500 index. Now, we know that on September 13th, just a week or so ago, the SPY made a new all-time closing high at $250.17. That was just a little over $2,500 on the S&P 500 itself. Now today when I captured this chart, the SPY was trading at $249.35. We see here that we have support from the green line on this screen, the 50-day moving average, at $246.82. Of course, we see the 20-day up here a little higher. We also see that right about where the 50-day moving average is, we also have this extended long-term trend line coming in just about pretty close to the same place, just a little under the 50-day moving average. So this area here should provide reasonably strong potential support for the SPY should it find the need next week to pull down toward this area and take a little rest. Of course, we'd prefer it not to fall through the 50-day moving average and close below the trend line, because then that is a slight negative when it moves below that support line there. We do see the 200-day moving average moving up here nicely at $238. One thing I want to note here, though, is that the 14-day RSI that you see here in this screen, in this scale, is trading right up at just below its overbought area, which comes in at 70. Now, what's interesting about the SPY moving up here, just up to this 70 line, but not above it, is it's saying that the SPY is not really overbought here. Kind of interesting also that the highs it made back here in June are lower on the RSI. See these coinciding highs, lower on the RSI. Excuse me, don't go up above this overbought zone again, but on this, what I should say is the RSI is lower here. The SPY is making a higher high. The RSI is not making a higher high. That's what I'm trying to say here. So that's kind of interesting, and it's a slight negative. We also see slow stochastics here have popped up to their overbought zone over 80, and then they're hooked back down right now. Now, I call slow stochastics the drama queen, as it can really move pretty quickly from highs to lows, from overbought to oversold. Here it was slightly overbought, but now it's hooking down in a slight negative divergence to price, which is really, in the last week or so, just consolidating sideways. So kind of interesting that these 2 indicators are saying to us, yes, I know the SPY is at all-time highs here, but at the moment I'm not as optimistic about it as you are. Still in all, we trade what we see. We keep everything in mind, and the SPY is in a very nice uptrend. So far, so good. We can't complain. But I am, as you know, in the last couple of weeks, I've been adding little layers of caution here in what I do. Small share size, firm stops, raising a little cash. So that's what I've been doing, and unless the SPY breaks out higher here, that's what I will continue to do until we see which way the market wants to go. Now our next chart here is the iShares Russell 2000 ETF, the IWM. We keep a close watch on this in Tony's Market Club, as you know, because the iShares Russell 2000 small caps can act as a leading indicator for the market. Now, we know that the IWM made an all-time closing high on July 25th, back here, of $144.05. Then it had a bearish engulfing candle, or top reversal day, we call it in Western technology. And then the IWM just said, I give up, I'm tired, I'm heading south. I just need a break. So it fell all the way down here to its lows below the 200-day moving average, and about 7% below all-time highs to an August low of about $134. Then, as the IWM will do, because it too is a drama queen, it rallied pretty hard back above this 200-day, back above the 50-day, and now it's kind of right back up where it started. So now it's finding resistance at this 144 zone. When I captured this chart today, the IWM was trading at 144.14. Now it's back to this high. Now this is a very interesting pattern. This was a very interesting move, but now this is where the rubber meets the road. This is where we find out how strong this index really is. Can it rally from here? Can it continue to move up over those prior all-time highs at 144 and change, move higher from here? If it does, that would be amazing, certainly positive. It is overbought in the short term on the 14-day RSI and on stochastics, slow stochastics. Can it rally here? But if, and many times when stocks get back up to prior all-time highs or relative highs, they need to rest. This has been a pretty strong move up here. So the next question is, if the IWM needs to rest, number one, can it stay above its 50-day moving average if it pulls back? And number two, can it make a higher low, this low down here at 134 and change, can it make a higher low above that and then rally up and go into a new high? If it can make a higher low and stay above the 50 and or the 200-day moving average, that would be positive. But for any reason, if it needs to come back down here and retest this low, that would be a negative for the market, because then that would signal a double top, which is a top reversal pattern, and certainly not my favorite. I'm fond of bull markets. So we will see how the IWM plays out this week. Be very, very interesting to watch. Okay, and now let's go on to our final chart for the day. This is the Energy Select Sector Spider Fund, the XLE. We could have looked at this last week, but I really wanted to make sure that this move potentially had legs. This is the energy, as I just said, the Energy Spider ETF, and the top components in this are Exxon, Chevron, Schlumberger, ConocoPhillips, EOG, and Occidental Petroleum. So if you look at this chart, and we backed it up even more, you would see that the XLE made a relative high on December 17th. You can't see it on this chart, at $78.45. Since then, it's fallen in a picture-perfect, well, I'm not drawing a straight line here, but in a picture-perfect downtrend. It's a textbook downtrend, sadly, but that's what it is. And it's fallen all the way back down here to lows at 61.80, August lows 61.80. That's a 21% drop. Now today it has moved. Since then it's made a little higher low here toward the end of August, back finally above its 50-day moving average, looking like it might have legs here. And when I captured this chart, it's trading at $67.22, above its 50-day moving average, above its 20-day moving average, still below the still slightly falling 200-day moving average, coming up here at 68. Now, what I'm thinking is, of course, they're having this OPEC meeting in Vienna. When that is done, that will probably affect this. But even if, and I'd kind of rather here, that the XLE would move down toward its 50-day moving average at 64.78, where it's coming in, and then rally back up, because I would like to purchase here shares as long as it stays above the 50-day moving average. So more down towards 66.50 or 66, or even down toward a little bit closer to 65 would be fine with me, but it may not do that. It may continue to rally. So you can scale into plays like this if it's something that interests you. We'll have to see what the price of oil does. So in order to play the XLE in an effective way, you really need to keep an eye on the USO, which will show you the direction of West Texas Intermediate oil that's sold in the United States. If the USO, and you can look at that, if that moves higher, then I suspect the XLE will. So I'm watching all this to see if I start adding a few shares of the XLE now to my portfolio in the coming week. As I said, it may move higher here and head back up toward the 200-day. It may have to pull back first. As you know, my stop is always a close below the 50-day moving average. If it does that, then I get out and maybe watch it for future developments. Okay, so now on to this weekend's, or this week I should say, coming week's economic reports. But first, please join us this coming Monday, September 25th, for our next session of Toni's Market Club, and we're going to be watching that oil trade closely. We're already in a couple of oil plays. We got in a little early to see if they'd work, and so far they are. So we'll talk more about oil plays in Toni's Market Club this Monday. We'll talk about which side of the market to trade. I'll give you a mini trading lesson, and I'll also give you stocks and ETFs that may be ripe for high potential trades. This is a low-priced, high-value opportunity for you to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available just a few minutes after the session ends to all of our members. For more information and to join, just go to tonysmarketclub.com. Next week's economic reports. On Tuesday, we have consumer confidence. Wednesday, we have durable orders, pending home sales, and our usual crude inventories. On Thursday, we have the GDP, gross domestic product, our usual jobless claims, and our usual natural gas inventories. On Friday, we have PCE prices, Chicago PMI, and the Michigan Sentiment Report. Again, join us this coming Monday for Toni's Market Club. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner.